Hey everybody, welcome to Trading Capital's analysis on Bitcoin. It is currently June 22nd and we're diving right into the Bitcoin chart. A few members have been asking me the reasons why someone should own Bitcoin and more or less the concerns about owning Bitcoin and essentially the risks, the pros and cons we'll touch base on. So this is Bitcoin's chart. Just jumping into the weekly chart, essentially Bitcoin's inception is 13 years old. But the chart started trading here in 2011. And the interesting thing about this chart is right away we have this massive parallel symmetrical channel that we've been chopping in through. So this is when in 2013 where you broke into this channel, touched the high in 2013, pulled off, kissed this channel in 2015, made a new high all the way in 2017, went through a crypto bear market, touched the lower channel during, I believe this was the COVID crash here, and now you tried making a new high, but you failed to hit the top of this channel. So more or less you can see you had your double top fake out. This was an attempt of a breakout, pushed to new all-time highs, but you failed. And you've had this massive sell-off. Basically, Bitcoin topped November 8th over here, the week of November 8th, and I think the Nasdaq topped November 15th. So very similar in terms of the time frame when they each put in their own top in the markets. So essentially, we just banked a little bit of a small profit on Bitcoin and Ethereum. We were stopped out of our trades last night, and we banked about just under 10% on Bitcoin, and I think just over 12% on Ethereum. So congrats on that. But what I'm going to discuss in this video is not necessarily the next trade setups, but we'll just go over why we took these trades. Initially, you have this 12-year channel, and you hit that to a T, right onto support. You also had this downsloping trend line, which was your breakout trend line, which here was your breakout. You retraced back to the trend line, and you tried breaking out and making a new high, which you did, but it was a failed breakout. You did not confirm, and you've sold off ever since. And you had this beautiful weekly time count coming into a massive support area. I do think you eventually break this, but I do think we get a bounce potentially back up to 25,000, maybe with a second tweezer bottom retrace. So a couple of the pros as to why I do like Bitcoin over the long term. And there's a lot of people that do compare it to gold. I think both assets are necessary in one's portfolio. Gold is the ultimate preservation of wealth. Although Bitcoin is very similar in the sense as to why you would want to own Bitcoin and the reasons why you own gold are very similar in nature, I do think gold is still the supreme asset in a hedge against, monetary instability or monetary chaos. And a couple of the pros as to why I think Bitcoin will survive as an asset is the first one. It's a fixed supply. So not even gold has a fixed supply. I think gold is the closest asset in terms of having a fixed supply at the rate that we mine it out of the ground. And then obviously it does take an extensive amount of investment to continue mining it. And obviously a mine roughly takes between 6 to 10 years to build, depending on what mine you're looking at, what metals you're trying to mine. So with the fixed supply of 21 million Bitcoin ever going to be mined, I think that is going to be the ultimate hedge against monetary debasement. Not saying that Bitcoin can't go down. I'm just think over the long term, as our central banks continue to print money, and it's no doubt in my mind that they will continue to print money, I think due to the Bitcoin's nature of having a fixed supply, the people knowing that there's only ever going to be 21 million is certainly an appealing asset. When you factor in that there's about 7 billion people on this planet, soon to be 8 billion, and there's only 21 million Bitcoin, it just suggests that not everyone is going to be able to own a Bitcoin in their lifetime. So it will inherently increase the price of it per Bitcoin as the money supply increases. As the money supply increases, I think Bitcoin provides you the best alpha to capitalize on that monetary debasement via our central banks. And when you think about Bitcoin, it's not just an asset that takes into account the US monetary debasement. It takes into account the global monetary debasement. So when you factor in, I believe there was 30 trillion printed to date globally when COVID hit. That is an exceptional amount of money that has been ripping fiat purchasing power apart over the last couple of years, more so specifically, but really over the last 50 years since we went off the gold standard. So the fixed supply of 21 million Bitcoin is certainly a pro, and it does appeal to the masses. Just like gold can't really ever be debased unless, for instance, we found, a gazillion ounces of gold lying around somewhere, that would certainly affect the supply. But that's pretty seems impossible. I don't think that will ever happen. The second aspect of a pro as to why I do think Bitcoin will survive as an asset is simply you can transfer money and value borderless within 10 minutes pretty much anywhere in the world. So as long as someone has a crypto exchange account, they can pretty much move money across the world without having to wait the bank days, the business days that banks put on your transfers, your wire transfers, anywhere in the range of 3 to 5 business days. Bitcoin doesn't have those financial institution, holding time days. Essentially, the holding times that banks implement with those 3 to 5 days, your money, when you transfer it, it goes right out into the derivatives market, and they start looking at high risk opportunities, high risk investments, as they try to use your money in the short term to pocket themselves a gain in the derivatives market. The derivatives market is only tradable for banks and financial institutions, and essentially it is a very large market that doesn't necessarily get counted on banks' balance sheets in the way that it would completely make every single bank in the world insolvent if they counted the derivatives market. We're talking about a derivatives market that is quadrillions deep in liquidity. So the fact that Bitcoin doesn't have those holding times, it doesn't allow banks to skim and use your money to make profit for themselves in the short term. And often when banks use your money in the short term to make profit, if those investments go sour, which is what we're kind of living through now, it puts a whole systemic risk for the whole financial institution. Because if the banks make a wrong investment or a wrong trade, we are known as the default creditor. And essentially, yes, money in a bank is FDIC insured or it has some sort of insurance to it, but if you had to calculate all the liabilities of banks, they certainly do not have enough to insure everybody's money in all bank accounts. I think roughly only 10% of the global wealth could be covered by insurance in the event of some systemic crisis or liquidity crisis or an economic collapse. So Bitcoin being the sense that you can transfer money within 10 minutes from anywhere in any point of the world really is taking our monetary and financial system to a complete new technological level. The ability to move your money when you want to, I think, is the ultimate scenario, and I do think that technology will continue to push this. There should not be holding times on banks where they trade and invest your money that you're sending just to line their pockets. The third aspect why I think Bitcoin is essentially an asset that will survive is simply the Bitcoin network provides equality. And let me elaborate on what I mean by Bitcoin providing equality. If someone has, let's look at gold, for example. If someone had $1 billion in gold, or 1 ounce in gold, the protection required to secure that $1 billion gold is enormous. You have to have massive vaults. You have to have security. You have to have staff, accounting to essentially keep track of all that gold, the inventories. Versus someone that has 1 ounce of gold, you're not going to have as much security because the amount is far less than the billion. So Bitcoin, if someone has $1 billion in Bitcoin and someone has $1,000 in Bitcoin, the Bitcoin network provides the same equality in terms of protection across the whole Bitcoin network. Someone with $1 billion in Bitcoin and someone with $1,000 in Bitcoin has the same sense of security and has the same level of security in the overall blockchain Bitcoin network. So I think that is a big aspect where Bitcoin does not discriminate how much you have in terms of how secure the network is. And I think as a fourth pro for owning Bitcoin is, for the first time in history, a normal citizen can provide value and earn income as they support this potential network. So through the use of mining Bitcoin, more Bitcoin is essentially brought forth onto the network. Right now, I think there's about just over 19 million Bitcoin in the system, and essentially in 100 years, all of those 21 million Bitcoin will be mined. But this is the first time a regular average person can start mining Bitcoin through the use of CPUs and mining hardware and actually get paid in Bitcoin to support that network. So I do think, versus, for instance, you can't support the US dollar network. You can't start printing your own money, debasing the currency. Whereas Bitcoin, you can actually start helping solving mathematical equations and actual applications to inevitably mine more Bitcoin, which supports the network over time. So I do think a lot of people misconstrue Bitcoin as a monetary asset. I don't think, in my personal opinion, despite it has been used as a form of payment and a unit of account by the means of transacting and buying goods and services, I don't see Bitcoin as a form of transaction or payment. Just like gold, we haven't used gold as a form of payment in a very, very long time because, for instance, it's very difficult to divide gold and split it down into the unit of account that we need. So I think gold as a store of value is kind of more along the lines of what Bitcoin should be and is more of a store of value. Because it does have that fixed supply, there's only ever going to be 21 million Bitcoin. And that is, I think, the most important thing about understanding Bitcoin is the fixed supply concept. It's a simple economics 101 supply and demand concept. As we increase the monetary base globally, since there's a fixed supply in Bitcoin, it should mean people will continue to buy Bitcoin because it does protect you against that monetary debasement. Now, a couple of the cons as to why I think Bitcoin is still a speculative risk asset. The first and foremost is the age of Bitcoin. We have to take into account it's only 13 years old. And something that is 13 years old is going to have sporadic moves, crazy swings, wild news and headlines because it hasn't been tested under the time aspect that, say, gold has met and succeeded over the last 2,000 years or longer. So I think we definitely have to take into account that the age factor is certainly the speculative side of Bitcoin. And secondly, Bitcoin was born in a quantitative easing cycle. It's never been through a quantitative tightening cycle. So I do think we have to keep that in mind. As the money supply decreases and interest rates increase, it certainly will put liquidity pressures on speculative risk on assets like Bitcoin. There is a hope in, say, 10 years that Bitcoin can eventually change over to a risk on asset, but essentially it has to prove itself through this next cycle, through a recession, through an economic collapse, through a credit crisis, and I do think eventually it will remain, but it has to go through a cleansing period because we do have speculative money all throughout the crypto industry. And I think we'll get a good sense as to where there's a bottom in the crypto industry by the sense that there's coins like Dogecoin and Shiba that have fundamentally no reason to own other than Elon Musk is holding some, which is probably the biggest pump and dump scam to date. But the fact that those coins are being inflated faster than the US dollar is pretty scary. If I wanted to lose my purchasing power, I would just go in the US dollar and hold cash over time. But I'm not that naive to let the central banks of US win, as well as I'm not that naive to let the Dogecoin and Shiba holders. But the fact that those are still holding multi-billion-dollar market caps, that has to come out of the crypto industry, and I think that will come out over this next down leg cycle in crypto. And I think one of the most important things that we have to understand, and one of the risks or the the headwinds for Bitcoin is the sense that I do believe it does provide you a protection against monetary debasement, but the ultimate protection is still gold. And for one simple reason why gold and Bitcoin are uncomparable and two different asset classes, simply for the fact that the Bitcoin network, and more so along the lines of power grids. Most people don't have generators in their homes. So if the power grid was attacked and power went out, most people would not be able to access their Bitcoin, transfer their Bitcoin. So power outages are simply a black swan event that could hurt Bitcoin. And let's just say the argument is that you do have a backup generator. It negates that black swan that headwind. Well, the next headwind is more along the lines of Bitcoin needs the internet or a Wi-Fi or a data connection. If for some reason Wi-Fi connections were disrupted for an extended period of time, and if for some reason data, which is run by satellites, were interrupted for an extended period of time, then that makes Bitcoin obsolete. Bitcoin will not be able to function without a Wi-Fi or some sort of internet connection. So I do think that aspect is certainly a tailwind for a lot of people. Now, that being said, for the whole world, we're talking about hundreds of countries where Bitcoin network is being upheld through a variety of different miners who hold different political ideologies, different beliefs. They live in different parts of the world. It is very difficult for a blackout to take down every single network or Wi-Fi connection in the world. It would have to be some sort of cataclysmic event that takes down every single Wi-Fi router or data or satellite data point in the world, which again could happen in theory, but what percentage can you associate to that sort of a risk? I find it very difficult to think that the world can go in a complete full-on blackout worldwide. So, but it is something we have to think about, and I think that's the aspect where gold remains supreme, is that gold has no counterparty risk. So most people are safe holding it. Sure, you could have a home invasion and someone rob you of all your metals, but essentially that would be your fault to not have it in a secure place that most people can't find or won't find. And eventually, and also having a hedge, it's never a good thing to keep all of your metals in one single place. And I think I forgot one of the pros is that Bitcoin is decentralized. It's not controlled by one single entity, and it will never be controlled by one single entity. So I think that is an aspect that we also have to consider, is that it's the opposite of fiat currencies. And essentially when it was created in 2008, Satoshi Nakamoto did not like the aspect of quantitative easing and zero interest rate policy. So essentially I do think Bitcoin heads lower over time, over this cycle, but inevitably I think it does have the best asymmetric investment opportunity, meaning it could go to zero, but it also could go to $1 million a coin. And it is going to solely rely on whether central banks around the world are going to continue to expand the monetary base. And as history shows, they always do, because that's their power to hold over the system and remain in power through financial and economic slavery, essentially, and by ripping purchasing power from ordinary citizens around the world. So I do think there's lots of similarities to own Bitcoin, and I just want to end this Bitcoin rant on this note. If you think smartphones are going to ever disappear and go away, then you should not invest in Bitcoin. But if you think smartphones are going to remain as a form of us using our wallets through our traditional banking system, Bitcoin is essentially it's not a physical asset, but essentially your phone is your physical asset. And allowing Bitcoin to be carried on your phone at all times is essentially another positive where I see being adopted by millions and billions of people over the course of the next 10 to 20 years. If you look at the S-curve adoption of the internet also went through periods of massive speculation, massive negative propaganda by mainstream media, and it also went through its trials and tribulations, but it reached that inevitable maturity point where the internet user base 10x'd over a very short period of time. And that S-curve is kind of what we're experiencing now with Bitcoin. Obviously, it's going through a QT cycle, which will put tremendous amounts of pressure on it. But I do think as we have a washout, it does provide that asymmetric investment portfolio. And with anything, you have to identify the risks and rewards. That's why I don't think you put 100% of your net worth in Bitcoin. I am comfortable with putting 10 to 15% of my net worth in the crypto space, with the majority of that being in Bitcoin and potentially exploring Ethereum as well. Ethereum is even more of a speculative play than Bitcoin, for the one simple reason is the easiest explanation is you're betting on software. The blockchain, Ethereum, is the newest 2.0 software that big tech and mega cap companies will introduce in their business models to help explore efficiencies. But essentially, Bitcoin has its risks, has its rewards. I do think it provides the best asymmetric risk to reward setup as we head lower in this cycle. That's why I will accumulate Bitcoin myself at key technical levels as we fall lower on the charts. And I do think come 5 years from now, we could easily be at 250,000 a coin, potentially even 500,000 a coin. If you look at the fact that we've been expanding the monetary base over the last 6 years by 12% year over year, the next jump in monetary expansion should bring us to potentially around the 15 to 16% year over year increase for the next 6 years after this QT cycle is complete. So with that type of expansion in the monetary base, I think Bitcoin's fixed asset properties do provide that very, very appealing investment opportunity. But don't over leverage yourself in the crypto space. The one reason I think crypto has been hit so hard is due to the fact of leverage. Since it is technically an unregulated space without SEC approval, it does pose a lot of risks with exchanges potentially going insolvent. And you also have the factor that people have been taking on crypto loans 50x, 100x times their position size. So if you're taking on leverage 50 times with what you're putting in, I mean, a 2% drawdown in that asset can already make you lose 100%. So the type of leverage in crypto is way, way too crazy. And I think it's ultimately in the short term provided a great systemic risk for many of the exchanges, for many of the crypto lenders, and for many of the coins itself. Because again, we've seen record number of traders enter in 2020 and 2021, and we're seeing record closures. And obviously when you have fear, uncertainty, and doubt going through the industry with the likes of Celsius and 3AC, which are crypto lenders, some of the biggest crypto lenders going potentially insolvent, and then you have rumors of BlockFi almost defaulting and having to be bailed out with a $250 million loan from FTX. There's so much fear in the short term that inevitably puts tremendous liquidity pressures on the crypto space as people just want to storm for the exits, get my money out, and so on and so forth. And full disclosure, I was with BlockFi, and even though I do believe in Bitcoin, I pulled all of my money out of BlockFi, and I'm essentially now in cash because I don't know which crypto lenders will survive. I do think more will go out of business as the cycle continues lower, and I just don't know how well insulated they are in terms of what investments have they taken on to provide that yield to other customers. And I don't know if they're losing on those investments. It certainly seems that way with a variety of crypto lenders now on the brink of insolvency. So it's going to be certainly a very difficult cycle to be buying at these lower lows, but I think you have to have a plan in place. You have to be ready for some severe downside in the crypto space. We've already seen Bitcoin fall 74% from the highs, and I don't think it's over. I think we get that small technical bounce before starting the next legs with the overall markets and indexes. So just stay vigilant. I think there's lots of pros, there's lots of cons. The main concept that I think you should understand is blockchain. If you do a thorough research on blockchain, the applications and capabilities over the next decade are really going to revolutionize our financial system. And because this technology, especially like Bitcoin, is so disruptive to traditional finance in the sense that this could stop banks from taking your money within that 3 to 5 business day holding period, and them making money on your money or losing money on your money. So it has that more sense of truth and trust behind it, because people know if you want to send your money within 10 minutes across the world, you can do that. The banks should have the technology to do that. They just don't want to implement the technology because it's been making them money hand over fist for years and years and years. I hope this scratches the surface and piques people's interests and makes them think about Bitcoin in a different perspective. Of course, this type of asset is not for everyone, and there is always the chance it goes to zero for all we know. But I do think there is always that chance that it goes to 1 million or even higher throughout the next 10, 20, 30, 40 plus years. But it's certainly interesting times, and there's not many times where a revolutionary, potentially new asset class is born into a decade. And this could arguably be the best investment of the century if it survives these QT cycles. And I think if Bitcoin survives this cycle, this credit crisis, debt crisis cycle, if it manages to hold and survive, I think it will be the best performing asset of a century, because then it will have experienced a QE cycle and it will have experienced now a QT cycle. So lots to consider, lots to think about. We have to be nimble. Bitcoin won't go down in a straight line, but when there is fear and selling pressure, it certainly falls tremendously fast. Thank you all for listening to this Bitcoin video. I hope it sheds a little bit of clarity as to some of the pros and cons. If you have any additional comments or concerns, please hit the like button below or leave a comment, and we'll certainly try